Joining me now, QI Research CEO and Chief Strategist Danielle DiMartino Booth. Danielle, let's go over the checklist before we get to this, right? Powell's sort of checklist, starting with inflation. Okay, U.S. data surprise right now. We've seen that yellow line. We had the data surprises, inflation going down. Of course, this morning we got the quarter over quarter data on GDP. Again, maybe, what do you think? I mean, it looks like we're heading in the right direction. Is inflation the threat that everyone thought it would be? Is it the threat that Powell and company thought it would be just at the last meeting?
Well, it's interesting you asked, Charles, because there was another report that came out this morning that Chair Powell guided us to last December that shows what new tenant rent growth is. This is a Cleveland Fed metric. And when you put that into the market-based core PCE, we'll see that tomorrow morning. But when you put that in, we actually found that we had deflation year over year. The strength of shelter disinflation right now is absolutely unmistakable, and it is overwhelming any kind of tariff impulse that we're seeing on the goods side. Chair Powell has the absolute green light to go in September.
The shelter deflation, does that offset service inflation that I think at one point you were a little concerned about?
Well, actually, I've been concerned about essentials goods inflation. Okay. Those are the types of input costs that must be, to a certain extent, passed along. But whether you're talking about hotels, airlines, we really have seen services disinflation really pick up as well. So between shelter and services, those are your two largest components of your inflation metrics. They're both under tremendous pressure.
All right, let's talk about labor for a moment. JOLTS reporting yesterday. Of course, layoff rate is flat. We don't think that's where the problem is going to come from. I've been saying all along, I think we'll have a hiring situation. People are going to lose their jobs, get fired, attrition, whatever it is. Companies not hiring. We do see the hiring rate coming down. Of course, JOLTS come down. The jobs opening rate has come down as well. Also, yesterday, we got consumer confidence. And within that consumer confidence, jobs harder to find. That's made a real big move since January. So where are we with the labor? Because I heard Edward Lawrence saying that the statement says that they feel that labor is, I think the word was solid.
I don't think that most working men and women would agree with that assessment. We have seen 7 consecutive increases, to your point, since January in jobs hard to get. It rose to 18.9%. That's a cycle high, the highest since March of 2021. We've never seen 6, much less 7, sequential increases in this particular gauge, unless the U.S. economy is already in recession, Charles.
Tariff uncertainty, obviously, since the last meeting. Some deals have come through here. You've got the United Kingdom, Vietnam, Indonesia, Philippines, Japan, and, of course, the big one, EU.
We do.
How much more anxious should the Fed be about this?
I don't think that the Fed should be quite as anxious about this as workers' perceptions of the job market and the fact that inflation-adjusted wages are coming down. I think it's time for them to lean on their inflation mandate. Companies are really suffering because of margin squeezes, which means they're not passing along these full input cost increases to their end customers. The Fed has evidence of that at this point, Charles, with another earnings season almost under our belt, and I think they need to shift their focus away from their inflation mandate to squarely working men and women.
You talked about, in your note, Hilton lowering their prices here recently. Also along that line, because I've got a minute to go, talk about this, but also this 2% target. We've talked about this many times in the past, and we've got a nice table we're going to pull up here for the audience, right? This is going way back, 152 economy since 1971. Is 2% really? I mean, I know that's the dream, but how realistic is that in this world right now?
Well, again, at the rate that we're seeing shelter disinflation accelerate, Charles, and we are, I think that it's going to not just be attainable, but that it's going to be something that they're going to try and pull back up.
We may go below it, you're saying?
Absolutely. Again, a gauge that Chair Powell described for us at the December FOMC this morning was negative 0.3%
and to be clear with the audience, we should be much more afraid of deflation, a deflationary death spiral, than a little bit of inflation.
Because it makes your debts more expensive is the bottom line, and that's why the Fed can fight inflation. The Fed cannot fight deflation.
Real quick, shadow Fed, you okay with that, or?
I don't think we're going to have a shadow Fed. I think Treasury Secretary Scott Bessent understands the Supreme Court's ruling, and I don't think we're going to have a shadow Fed.
All right. Danielle, please stick around.
Of course.
Need your help later on to decipher this Fed speak, the Powell speak. All right, folks.